In 1913, the Federal Reserve Bank was created as a way to stop bank panics. In 1933, the FDIC insurance system was created to also stop these bank panics. In 1971, the United States dollar was officially severed off of the gold standard temporarily, which meant that our money was no longer backed by precious metals like physical gold, and our money became paper, which gave the Federal Reserve Bank the ability to print more money. Because before 1971, if the Federal Reserve Bank wanted to create more money, it needed more collateral in the form of gold to print more money. After 1971, it didn't need that gold. It could print essentially whatever amount of money that it needed to fund the government operations. So between 1971 to 2008, the Federal Reserve Bank was there to serve as a helping hand for the government to essentially help government spending and be there for that additional funding source for the United States government. But then in 2008, we all remember that we had this big recession, the 2008 Great Financial Crisis, where we had the housing market entirely implode and our entire financial system was on the brink of collapse. That happened in 2008, and for the first time ever, we now saw the Federal Reserve Bank do something completely different, which was QE, quantitative easing. And what quantitative easing was the Federal Reserve Bank was now printing money in order to fund these stimulus programs to boost the economy. So now instead of just helping the banking system and helping the government, now the Federal Reserve Bank is getting involved in the economy to help stimulate and boost the economy and print more money to get the economy moving, because in 2008, the economy stopped. The economy was a horrible, horrible situation because the entire market had imploded. And now what we're seeing happen today is that the Federal Reserve Bank is being used to fund any spending that the government can't get passed through Congress. Because normally when the government wants to spend money, they need to raise taxes. I mean, they have to get that money from somewhere. But if they can't get that tax approved through Congress, now what we're seeing happen is that the government is going straight to the Fed and saying, give us $1 trillion so we can go and fund whatever we want to do. And so now the government is able to pass these spending bills without going through Congress, through the help of the Federal Reserve Bank, when originally it was there just as a way to stop the bank panics. But now let me tie this entire video together, because remember, in 1913, two things happened. On one hand, the Federal Reserve Bank was created. On the other hand, what else happened? Don't forget, it was the federal income tax that was ratified. Why does this matter? Because at the end of the day, all government spending is some form of tax. Because if the government goes out and spends money to, let's just say, build a bridge, somebody has to pay for that. Either the government is going to raise a tax on people to pay for this bridge, or the government is going to spend that money through the Federal Reserve Bank's money and then build that bridge. But if the government gets that money from the Federal Reserve Bank, who's paying for it then? Now this is where we have to go back just a little bit and understand that although they're called the Federal Reserve Bank, they're actually not federal. They were never intended to be federal, and even today on their website it says it's not federal. So they're not a part of the federal government. They're not a reserve because they're not sitting on any cash reserves. Remember, they're not the Treasury Department, they're not a part of the government, and they're not a bank. You and I can't go there to deposit money, so it's a little bit of a deceiving name. But they have the ability to essentially create money out of thin air. So now, if the government wants to build this $1 trillion bridge, and they get this money from the Federal Reserve Bank, well now, the government might not be able to get it approved from Congress, so we don't know where this money is coming from. It just comes from the Federal Reserve Bank, and then the government then builds the bridge, which might have you wondering, if the government can just create this money out of thin air, why are we paying so much money in taxes in the first place? I mean, we have seen how much taxes have increased over the last 100 or so years. If the government can just take this money from the Fed, why do we need to pay so much money in taxes? And the reason why is because when the government borrows this money from the Federal Reserve Bank, it is still a tax. It's just now a hidden tax that doesn't always have to get approved the way that normal taxes get approved. And when I call it a hidden tax, what I mean by that is this is a tax in the form of inflation. Because when the Federal Reserve Bank creates more money, what are we doing? We're inflating how many dollars are out there. And when you increase how many dollars are out there without increasing the wealth, the value of each individual dollar goes down. Think of it this way. If you, me, and 3 other people, so there's 5 people in total, live on this planet right here. There's 5 of us. And each one of us 5 have $20. So there's $100 in this world. There's 5 of us people, and each one of us have $20 each. We're all equally rich. So we all own 20% of the wealth because we all own $20. But then let's say that the government here doubles all of our monies. They write us a check for $20 each. So I get $20 more, you get $20 more, and everybody else gets $20 more. Everybody has $40. Now you might feel like you just became doubly wealthy because you doubled your money from $20 to $40. But what you'll realize very quickly is that you really didn't become any wealthier, because all that has happened is the value of each individual dollar has gone down, because all we've done is double the amount of dollars, double the amount of currency without increasing any additional amount of wealth. Now sure, maybe if you get that money early, you can go to the car and buy that car fast before the dealer learns about how there's more dollars out there and sees the impact of that. But eventually, that's what's going to happen. No one's going to be really wealthier than before because we just increase how many dollars are out there without increasing the wealth. And this is how Federal Reserve Bank printing, along with government spending, is a tax. See, all government spending is a tax. Somebody has to pay for it at the end of the day. Either it's going to be paid directly through a tax that you can see and everybody knows where this money is coming from. Like if the government raised a 1% tax on all wealthy people, you know where that money came from. But when they spend that money through the Federal Reserve Bank, well, now it's a tax that you have to pay through inflation, and now you don't know exactly who's paying for it. However, what we do know is the person that disproportionately pays the price is the person that doesn't understand inflation. And the reason why I say that is because inflation disproportionately hurts the average person, it disproportionately hurts the consumer, but it disproportionately benefits the investor. Investment values generally benefit from inflation, while consumption becomes more expensive. So what does that mean in plain English? That means that when you go and shop, you buy the guac from Chipotle, it becomes more expensive. So for the people that are spending money, life is more expensive. But for the investors that own the assets, that own the stocks, that own the real estate, your investment values go up. And this is what we have seen happen, not just over the last few years, but over the last number of decades. That investment values have grown significantly faster than incomes. I mean, over the last 5 years, between 2019 and 2024, incomes have risen by around 20%, but the S&P 500, the stock market, has grown by around 90%. And if you say, well, that's just because of the pandemic. Well, let's go back 5 decades. Between 1971 and 2021, household income has increased by around 600%. But over the same time, the S&P 500, the stock market, has grown by around 4,000%. Not to mention the fact that between 1971 and 2021, household income went from one-person households to two-person households, because in 1971, it was the man that went to work and the woman didn't, and in 2021, it's two people going to work. So, inflation is hurting the average person. The average person has no idea this is happening, but this is where you have to understand how our economic system works. That way you can actually win in this economic system, because the reality is the people that win are the people that understand the game. They understand the rules to the game. Well, most people never learn a thing. They don't understand how money works. They don't understand how the economic system works. They don't understand what investing is. They don't understand how to invest. But if you want to win in the game, you have to understand how to win in the game. And the way you win is by becoming an investor. Unfortunately, or fortunately, that's the rules to the game. Now, I'm not saying this so you love me or hate me. I'm saying this so you understand the rules, because these are things that I wish somebody would have told me. Because I went through a lot of schooling. I mean, I went through college and grad school and law school, and I never once learned a thing about money or investing or building wealth or our economic system. But the reality is people are working to make money. We can talk about all this hippie la stuff that people are working for happiness. Good, I want you to be happy. I'm not saying that money is the only thing that's important in life. But money is also important because everybody's working to feed their families, right? I mean, we're all working to get paid in some way. And so if everyone's working to get paid, you gotta understand how money works, that we can have more financial freedom for yourself, because the reality is, if you don't have that financial freedom, you get stuck and you don't wonder why you can't break out of the system. And the first part is to understand how the game works, and then to understand how to invest your money. Now again, I have a free newsletter called Market Briefs where my team is breaking down what's happening in the financial markets, but I have a ton of free education on my channel where you can learn about how to start investing, different ways to invest. That way, hopefully, you can start investing your money and start building wealth for yourself. But just understand, markets go up and markets go down. Recessions happen. They've happened in the past and they will continue to happen. And while we do see market crashes, those create great investment opportunities for the financially savvy that can come in and buy the good investments when they're on sale. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.